Okay. Good evening, everybody, and welcome to Financial Fridays. This is a very, very important sessions that we do every Fridays, and it is going live on Facebook. So I would encourage you to message your friends and others to join because learning like this is very rare, and it's important that we make the best use of the experts that we have on the panel. Our topic today is cash flow budgeting and taxation. But prior to getting into the discussions, I'd like to give a few housekeeping tips to all of those who are listening in intently. Kindly keep your cameras off, your phones on mute, and also if you could mute your side of the button as well so that there is no disturbance during the discussions. I'm going to encourage all of you to keep your questions coming in the chat so that the experts know the doubts that you have, and it is very interactive session that we go today. I'd like to introduce our moderator for today, Ms. Nandini Chaudhary, Chairwoman CII IWN Delhi chapter. She's also one of the founding members. She's a consulting partner at IWN Delhi chapter. She's a consulting partner at Force Servers SpecTech and also trust chair at Arya Vidya Mandir, a trust that is actively involved in girl-child education for the socio-economic weaker sections of society. I'd like to thank her for her undeterred support and autonomy in curating this path-breaking series. The theme for CIIW Delhi chapter this year is Women Rising, Breaking Barriers, Breaking Bias. This clear focus has translated into our specially curated series to educate and empower women across all segments with the knowledge and tools to take care of their own financing. And of course, that goes for the men too, who are part of the audience today, to learn and manage their finances in a planned and informed manner. I'd like all of you to pay attention and also keep your questions coming. Over to you, Nandini.
Thank you, Lata. Thank you so much. And it's a pleasure being here. And I am going to just start why we wanted to have this series. And of course, thank Vani, even before we start, for putting it together and for helping me moderate this session today with the right questions, because I am not a finance expert, but Vani is. So Vani is going to be doing that for us today. But as women, we are not only bosses at our workplace, but also at our own houses. But how to be an effective planner for our finances greatly depends on the budgeting practices we follow and the amount we end up saving for our investments monthly and eventually on an annual basis. After investing our savings, if we end up giving all of it away in taxes, it would be really heartening. Today, we have two esteemed speakers with us to discuss the topics of budgeting and taxation. Cash flow and budgeting. Our endeavor is to suggest ways to how one can get better in managing their finances, the journey from discovering where the money goes each month to deciding where it must go. Our speaker today is going to share his practical experience on the ideal saving levels on one that must target to reach the state of financial nirvana. Also, why is it absolutely necessary to have an emergency fund? Moreover, insights on how to manage impulsive spending shall be a great takeaway. I think that is very important for women. Our own IWN member, Ms. Vani Bajaj, shall be moderating the session. Ms. Jayavani Bajaj is the chief mentor of ICOP, representing the promoters of International College of Financial Planning. With over 18 years of industry experience and 14, especially as an educationist, she's dedicated to improving the student learning experience and launching the strategic projects. Ms. Bajaj holds a degree in small business management from Delhi University and a master's in management with a marketing specialization. Her career began in the fashion industry before transitioning to the financial services sector, and she's done that beautifully. Her passion for providing industry-oriented education led her to the education industry. Ms. Bajaj is a certified pranic healer and enjoys reading books on self-development and spirituality. She is also a self-motivated learner, currently pursuing research at IIT Delhi while cherishing quality time with her family. So over to you, Vani, to take this forward.
Thank you, Nandini, for the beautiful introduction. And now it's time that I introduce the eminent speakers that we have here today. Personally, I've known them for over 2 decades, and they both are visionaries in their own sectors. So Mr. Anil Chopra, a luminary in financial planning and investment advisory, is currently director in the Bajaj Capital Group of companies. Starting his journey in 1984, he has significantly amplified the company's reach from 6 to 235 offices as the CEO until 2017. As a chartered accountant and certified financial planner, his contributions to the financial sector have been path-breaking. He pioneered the concept of financial planning in India by bringing the Financial Planning Standards Board in the year 2000. His expertise in the area of taxation dates back to more than 30 years. He has delivered numerous talks, been a speaker on many television shows, and has authored many articles in the area of taxation, retirement planning, and financial well-being. He has helped guide millions to a financially better future. Welcome, Mr. Chopra.
Thank you. I'm humbled by your kind words. Thank you so much.
Mr. Malhotra, our second speaker, an accomplished legal and finance professional, boasts of extensive leadership experience with top corporations like Aditya Birla Group, Bharti Group, Shoppers Stop, and K. Raheja Group as senior vertical head and business operations head responsible for service and delivery. As a Six Sigma Black Belt, he worked on process improvement and team management in the above-mentioned companies. This unique blend of academic qualifications in law, business, and commerce complements his practical expertise in finance, making him a true industry stalwart. He currently imparts his wisdom as a faculty of ICOFP, giving education to hundreds of students every year. And he practices law at the Delhi High Court. It's not often that we come across individuals who can seamlessly bridge the world of law and finance like Mr. Malhotra. His career path is quite intriguing, from corporate leadership to now shaping young minds and fighting legal battles. In his own words, cash flow and budgeting is my favorite topic and would love to share this knowledge with men and women who can use it as a tool to create wonders. So moving forward in our session today, we will start with a few questions on cash flow and budgeting with Mr. Malhotra. Mr. Malhotra, in a layman's term, how would you define the importance of budgeting?
Well, that's something which is actually touchy for most of us, including myself. And I would say all families, all individuals, they are at one point of time facing this kind of issues while handling their day-to-day operations. When I ask my students, or when I ask my even clients also, even my friends, my relatives, who is actually making the expense at your home? The answer is wife or husband, or sometimes people say both of them, which is correct. All of them are correct. But the perfect answer would be the person who's incurring the expenses, right? The cash flow and budgeting, they are cohesive. They go hand to hand. So let's understand. I've made some small presentation. I mean, it's so that we can go in a synchronized way. So how to go about it, right? And I can discuss about some inputs about how the cash flow and what are the challenges and how to manage it properly. And thereafter, we can go about the budgeting as well.
Could we share the presentation, please, Priyank?
Sure.
Yes, ma'am, just a second, please. Is my screen visible, sir, please?
Not yet.
I hope this is visible. Just a
No, Mr. Malhotra, we are sharing it at our end.
can't see anybody.
It came for a second and then it went away.
Just a
Yes, it's
I
visible.
can see the presentation, but really can't see anybody from here, from my end. So am I visible to everybody?
Yes, yes, you're visible.
Okay, so I'll continue without, just in case somebody has some questions, then definitely let me know.
I hope my screen is visible,
sure.
sir, please.
Sure. The basic question comes, first question comes to our mind is what exactly is the cash flow? Okay. This is the net amount of cash or cash equivalent. What exactly is cash equivalent? I'll discuss later on. Being transferred into or out of the family individual for a specified period of time. Can be 1 month, can be 1 quarter, can be one semi-annual, can be annual. So that means there are two outcome of the cash flow. One, overall, I have a positive cash flow. A positive cash flow means, which is a green one, which is like inflow, cash inflow is more than my cash outflow, which is leading to a surplus amount of investment. My inflow is more as compared to my outflow for a particular period of time, say 1 month or 3 months time. The other outcome, the other net result would be a negative cash flow. A negative cash flow means outflow is more as compared to my inflows. So thereby, either I have to redeem my existing investments to meet my expenses. So here I've used two different words, cash inflow and cash outflow. So let's understand what exactly meaning by this is a cash inflow. When I say cash inflow, is again been subcategorized into three different ones. One is like operating, investment, and financials. When we all go out for work, either we are self-employed or an employed person, we get some kind of salary. Or in case we are a self-employed or a businessman, then we get some profits. That's all part of a cash inflow. Now, salary is generally has been a regular one and been paid every month, fixed cash inflow. I'm getting it. It's coming to my pocket every month. Profit that generate out of my business may be irregular in nature. I don't get a fixed amount of profit every time, but definitely it's a part of my cash inflow. Second can be my investment, which I've already done, which I've already incurred by investments, like in form of invested into equity of some other companies or mutual fund for some other companies, then I get some dividends. So what exactly is dividend? Dividend is the company that wherever I've invested, my money is invested by the company, and whatever profit they are generating, I'm part to my extent, to the extent of my investment. So whatever amount as a profits that I'm getting it, that is known as a dividend, right? So in case I have made some investment in some other companies or some other business, then I'm getting a profit in form of a dividend. That also may be a irregular nature because not all companies or all mutual fund companies, they declare on a fixed date. So that kind of a fixed, not a fixed amount. I have made certain investments in, suppose, a bank FD. Then what do I get? Any form of interest. Or I invested in some government schemes. What do I get? Interest, a fixed amount. So the cash inflow, the point I want to really capture can be a regular nature or irregular in nature. Similarly, I may have a financial side in terms of rentals or cash gains. That all is part of cash inflow. For a fixed period, say 1 month or 3 months, I am getting a regular cash inflows. What exactly is a cash outflow? It's also been categorized into three categories. One is the basic one. Second is the maintenance one. Third can be a lifestyle one. Now, basic, when I say that I cannot live without the basic expenses, like all my monthly bills, be it in form of electricity bill, water bill, gas bill, telephone bill, all bills that I'm paying regularly, or EMIs that I'm paying on a month by month. All my grocery, school fees are the basic requirements I have to incur, whether I have cash inflow or I do not have a cash inflow, I have money in hand or I'm not getting money in hand, but I have to meet these basic cash outflow expenses, right? Every individual, every family do it. Then there are certain maintenance expenses like annual maintenance contract, all office equipments, like all household equipments, we maintain on a regular basis. Cars, vehicles, we maintain on a regular basis. All insurance premiums that we are paying on a regular basis. Now, these cash outflows may also be a fixed regular monthly investment, regular monthly payouts, or a irregular nature. Like premiums, I don't pay generally on a monthly basis. School fee is also not been paid on a monthly basis, it's been paid on a quarterly basis. So whether the frequency may differ, but it's all cash outflow. And similarly, my vacation. maybe quarterly, semi-annual, or any annual vacations that I'm doing with my family, or any celebration. Now, India, being a very culturally so diversified country, that almost every month, every family will have something to celebrate, be it anniversaries, be it birthdays, be it celebrations in terms of New Year, Christmas, Deepavali, or whatever. Every month we have. So these are all, whatever expenses that I'm incurring, these are all part of my cash outflow. So primarily, if I say that cash outflow for one particular month or one particular quarter, 3 months period is more, then it's a negative as compared to cash inflow. Or if it is the cash inflow is positive, then it's a positive cash inflow in totality. Now, going forward, that means in nutshell, a cash flow for an individual or family means his or her income and expenditure. All sort of incomes one side, all sort of expenses another side. So how do I manage my cash flow effectively? Obviously, this question comes, once we know it, that this is my all inflows and all outflows, how do I effectively manage? First
But
is,
what is the basic data that is required to create this kind of?
definitely, I'll share it. I have another Excel that I'll share it. What are the basic inputs which is required? But first, let's just give me just 5 minutes, and then I'll share the basic one. All right. What are the actual inputs like what we need to control? Controlling day-to-day financial affairs to enable you to do things that bring you satisfaction and enjoyment. I'm not using the word reduce it. I'm saying control. Control means at least have a watch on that. Wherever I'm making an expense or wherever sources I'm getting the money, and choosing a course towards medium and long-term financial goals. Financial goals in terms of buying a house, sending kids to college, or comfortable retirement. For an individual of say whose child is my child, suppose is 16 years of age. So for sending for kid to a college, probably could be a very short-term goal for me, because next 2 or 3 years maximum the child is going to college. But for somebody who's just 5 to 7 years is a long-term or mid-term goal. Okay, depends on person to person, depends on family to family. We need to choose what are the medium and long-term financial goals. Similarly, we need to manage our cash flow. And third is building a financial safety net to prevent any financial disaster caused by any catastrophic illness. Last 2.5 years, because of the COVID-19, I'm sure everybody, every family got affected due to lockdown. Business were down, complete lockdown. So, but still expenses, the regular basic expenses were still happening. We need to incur. So we need to have some months that we need to have in liquid form, so that in case any personal tragedy comes, any catastrophic illness comes, the person who is earning is not being able to go for a job or for his work. How long can we manage our cash flow effectively within incurring the same kind of expenses? Okay. Now, the cash flow planning and budgeting, as I've already said, go hand to hand. Cash flow is a part of budgeting, and budgeting, monthly budget, is a comprehensive one. Okay. So cash flow planning and budgeting is the most important activity for every family to do this, which includes that we need to do a short-term cash flow planning, that is for 3 months time or 6 months time. Second could be the cash budgeting, which I just explained how to do cash budgeting. I'm then just going to show an Excel also about this. Prepare a monthly household budget. That Excel will have the complete monthly household budget. Just an example that I've taken. And now next will be the midterm and long-term cash flow planning. Okay. Now budgeting, when we say that all expenses that we are putting in categories to fit my personal situation and spending habit of the family, we must find out where all the expenses are happening, be it in a range of basic one, be it another lifestyle one, be it in the kind of maintenance one. Okay. Now for that, we need to project all income, all expenses accurately. Unless we do not have the complete picture in hand about all income and expenses, the activity will be a futile activity. Okay. which means there are certain expenses while making the budgeting activity that we may not be doing on a monthly basis. Say, homeowners insurance, personal property tax, vehicle management. We don't incur every month. They are either once in a year or once in 6 months or once in a quarter, say, including school fee. We must include all those expenses, divide by 12, divide by 6, whatever the case, we convert into as a part of monthly budget. So that probably in next month when we require some money, we should not be short of funds. Okay. And we need to identify the spending pattern. This is like when we are not being aware, we are not tracking where exactly we're spending. Just take an example. If a vehicle needs to be maintained, okay, then when we talk about the budgeting activity, is the EMI for vehicle, petrol for vehicle, maybe for maintenance of vehicle. We may miss out that every 3 years or 5 years, some major expenses are happening for maintenance, or maybe the tires are worn out. People miss it that every 3 or 5 years we need to change or upgrade of the accessories. So certain uh, spending pattern has to be identified while doing this activity of budgeting. So once we make the complete budget, I'll show one example of a budget so that you can plan in a better way. I really don't know that you can see it or not. This Excel. Can somebody please tell me?
Not yet, not yet. We can't see any
Priyank,
Excel.
if we can move on to the
Just,
next.
Okay. Now, this is an example that created for monthly budget for 2023, say for the month of January. Okay. Now, the top one is the summary. Look at the extreme left-hand side. The
We have
total
to move
cash
on.
inflows is
We can't see on the screen.
1,29,500.
sir, are you sharing a different file, sir, please?
Sure.
Are you sharing? Do you want to share, sir, please?
Is it visible?
No, I need to
You're on a
stop.
different slide.
I need to stop my sharing, sir, please. If you wish to share the your
Uh,
file from your computer,
just a
sir,
minute.
please.
Okay.
Now, please try to share, sir, please.
Just
Share screen, sir, please.
I hope so. It should be visible now.
Yes, sir,
Yes.
please.
Yeah. All right. This is an Excel created, for example, for the monthly budget 2023 for the month of January. Okay. The total income for the entire family, that is cash inflow, is in form of say 1,29,500. Total expenses say 1,24,092. Okay. Now let's look at the breakup. The cash inflow, the husband's salary is 75,000, wife salary 40,000. You can see all headings. Whatever I discussed, say interest, dividend, rental, gifts from other income, say 1,29,500. Then is the outgoing existing investments in form of emergency fund, car replacement, retirement fund, investments, education, and all is approximately 17,000, which is 13.7% of the total expenses. Okay, then household expenses that we are incurring, rental or mortgage, that is EMI that we are paying on a regular basis, electricity expenses on a monthly basis, gas, water, phone, cable, furniture, maintenance, and everything. So total 33,000 approximately, which is 26 or 27 approximately percent of total expenses. This is an example of what all inputs should be taken for making a monthly household budget. And similarly, like say daily expenses, that is talking about the basic expenses like groceries, personal supplies, clothing, eating out, dry cleaning, barber, and all these things. So approximately 18 to 19%. It's just an example it's been taken. Okay. Then children expenses, school education, supplies, books, babysitting. So approximately on dependents on children, this family is spending say 7,000, which is around 6% of total expenses. And on transportation, they are spending say around 5.7, including cab, fuel, service maintenance, and everything. on healthcare. So once we actually start making this activity for the first time, probably it will be a slightly difficult, but after 2 or 3 attempts, we can more delve and detailed activity can be done, like including insurance, loans, how much we are paying, then on entertainment.
So,
And
Mr.
then-
Malhotra, if we talk about the saving from this budget, what could be the rule of thumb for saving and spending?
Sure. So this was just an example of that. Okay. Now, so when the budget activity has been done, then the next one is that we should have the compliance with budget. Making a budget is one thing. Compliance is like when we make the budget, is just before making an expenses. Compliance with budget is after all expenses have already been incurred. Okay. Then what do we actually get with the compliance is the variance. And the variance, like statement of variance, like what are the basic reasons why this changes have happened, or why the what are the specific measures have been taken to address this variance. Okay, this variance can be a result of either the error in the budgeting or wrong economic indicators been taken, say insurance, say inflation, or ignoring certain associated expenses with a particular head, like vehicle maintenance has not been taken. Now, when we make a budget, this will last only for 3 or 4 months, maximum 6 months. And thereafter, this activity again will change. So how long should we do this activity? It's a continuous activity, lifelong activity. Okay. Now, coming to the basic important points while making the budget, and then I'll come to what Vani ma'am has said this. It's like basic rule of thumb. Within this, we'll cover this. Use the correct ESS process. What exactly is ESS process is whatever we are earning on a monthly basis or a quarterly basis, we make certain spendings and then remaining amount we save. That is earning, spending, and saving. May not be the right one. The correct ESS process is first earn, save the required amount, and the balance amount should be spent. That's the right method. Once we earn it, maximum amount we are spending, and then hardly anything is left for your future savings. So first earn, then save, and the remaining amount should be for spending. So how do I rationalize my cash flow? How do I do this activity? There is a process, there is a ratio of 50, 20, 30%, where 50% of my total income should be spent on the basic expenses. That is all my needs, my basic requirements, which I cannot live without this. 20% is for my bonds, that is lifestyle expenses. And 30% ideally for my future requirements should be my saving. If we follow this mechanism, which is 50, 20, and 30, most of the family will be able to manage their goals properly, manage their cash inflows, cash flow properly, and the budget activity also be done properly. Okay. And also maintain a emergency sufficient fund for that.
Interesting. 50, 20, and 30.
Yeah. 50%, 20%, and 30%. 100 rupees is earned, 50%, not more than that, just 2-3% here and there. 50% should be spent on the basic expenses, which we cannot live without, like all expenses, grocery needs, monthly bills, school fee, everything. They're all my basic requirements.
And
Lifestyle
could you also
expenses.
elaborate on the emergency liquid fund?
So how to maintain an emergency and good fund? That's a really good question, and everybody is facing this kind of, and especially last 2-3 years. But I've seen after COVID that most of the families, the making an emergency fund got for a toss. So building emergency fund is equally important while managing the cash flow and budgeting activity. For that, I can give you technically, this is like very simple one. If we follow this, we can, I think, I'm not saying that we will never feel a cash crunch, but definitely we will be able to sail through more or less every kind of eventualities which may happen. When they talk about basic liquidity ratio, it is ability to handle my financial needs in case any decline in the income. The main earning member is not able to go for a job or not being able to do it, then how do we do it? This is liquid asset upon monthly expenses. Now, what exactly is the ratio talks about is the liquid fund. Liquid fund means readily and convertible into cash or readily available into cash between 3 to 6 months. Now, somebody can always ask, 3 to 6 months is a 50%, it's just 100% jump. For a it depends on the family construct. For a family of say dinks, double income, no kids, even 3 months should be okay. And for a family of a large family, 7 or 8 dependents, one earning member that also a businessman and irregular cash flow, probably 6 months may not be sufficient one. So ideal circumstances is 3 to 6 months should be sufficient one. Now, what I use two components. One is liquid asset, means cash at home, that is cash in hand. Cash in my saving account should be taken into it. And all my investment for a short-term maturity, that is money market mutual fund, which is actually a replica of saving bank account, that is maturity is up to 12 months, should be taken as my liquid asset. So all cash in hand, saving account, and money market mutual fund should be taken as my liquid assets as a numerator. Denominator is the monthly expense. It is not only limited to my grocery expenses, milk, vegetable, or monthly bills. No, it includes all my travel expenses, all my maintenance expenses, or school fee in case we are paying on a quarterly basis. Should be divided by 3, convert into monthly expense, grocery expense, monthly expense, everything, and should be taken an average of that, including insurance premium. So, for example, a family is having a monthly expense total put together, say 80,000 rupees. So, minimum 2,50,000 rupees should be there with the liquid fund. So that in case there is a decline in the income, in case there is a cash crunch, in case somebody is not able to generate some cash, okay, generate some cash inflows, should be able to maintain all those expenses. And that is how we maintain the liquid fund, and should be the emergency fund should be maintained like accordingly. Okay.
Yeah, that brings us to the next topic of impulsive buying and using our credit and debit cards, which we normally do because we don't see that going out of our pockets, the cash. So we end up spending on credit cards blindly. So if you could just elaborate on that.
So that's basically that is the last thing that I need to cover on this is the control impulsive buying. What exactly is impulsive buying? Something which is unplanned activity. We have never, there is no immediate requirement. This tendency to buy goods or services where we have no plan, no immediate requirement, no need, but we still buy it. When we actually go to a mall, a shopping mall, or maybe online purchasing, all lifestyle products, be it watches, mobile phones, when we actually enter even, that luxury watches, pens, everything's been displayed at front. They are all by impulsive buy. Okay. So what do? We are not carrying that much of cash. We use plastic money. That's a credit card or debit card. When I ask that, who actually pays for the cards when bent? All card swipes. Is it you or your bank? 90% people, they say that my bank is paying, which is correct. Actually, bank is paying, but ultimately, who is paying? That is you. There's a small story that I wanted to buy certain stuff. I was never, I never had it in my budget. My father gifted some money for that. Now money belongs to me. It is my choice whether I want to. Now I can't say this money has been gifted by my father. Whether I want to go for my regular requirements or my impulsive buying. So we need to make a list of the monthly shopping. And then accordingly, there has to be a budget for the monthly shopping. How much I would like to spend for my impulsive in case requirements. Doesn't mean that I stop using credit cards and debit cards or online payment. These credit card swipes should be used for the emergency purpose. Wherever I'm short of funds, short of cash immediately, then only then the credit card should be used. And complete outstanding of the credit card should be paid. I make a swipe of say 1 lakh rupees. How much they ask me? Just 5%, 5,000 rupees. I'm happy. I made a shopping of 1 lakh rupees. I have to pay only 5,000 rupees. Then they revolve around with the interest rate. Why I should pay the entire amount outstanding within next 45 days? Because this credit card payments are the most expensive one, which is approximately 2.5% to 3%. And if you really calculate, it turns out to be around 36% per annum. There is no other expensive item like credit card. So the point is, when we actually go out, we spend around 20-30%. We over exceed our budget because of this impulsive buying. That needs to be controlled. That is the objective, and for which banks or entities are not charging any annual subscription charges. They are just distributing it. Okay, so control it, and so that we can all live a debt-free life.
Thank you, Mr. Malhotra, for the enlightening session. We will move on to Mr. Chopra, much awaited topic of taxation. When I hear the word tax, I start sweating, not because of anything else, but just merely because I don't understand how it works. So, if we could have a little bit of understanding, and if we discuss what is the old tax regime versus the new tax regime, the benefits and which is suitable for us, if we could elaborate on that.
Sure, Vaniji. And may I request to stop sharing the screen? Right. So when Professor Malhotra was talking about cash flow and budgeting, I was feeling very tempted to contribute because that is also my topic. I have done about 520 webinars on that topic alone, which is how to attain financial nirvana and how to enjoy financial freedom. But maybe if we get an opportunity some other time, I would like to come back and have a detailed session, 90 minutes, covering this and much more. But now coming to the taxation, which is the topic this evening, friends, tax laws in India have been simplified significantly in last few years. Some of you who have been filing their income tax returns, for 10, 15, 20 years would vouch for this, that the tax laws are being simplified year after year. And now we have reached a stage where going forward, not much planning may be required because the new tax regime has been introduced in which all the deductions, etc., have been done away with. So before, I tell you what is the difference between the new tax regime and the old tax regime, I would just like to share with you, one small publication. I hope you all can see this, in my hand. This is a small 24-page booklet, what we call this tax saving guide. This is one of our most popular publication. It is in its 27th edition. And just to tell you who is the author of this, the person holding this. Yes, I only wrote this about 27 years ago in 1997. And it is the most popular publication we have because lakhs of people are filing their income tax return every year just by referring to this small booklet, because the common things are all mentioned here in a very simple language. And if any of you are interested to get a copy of this, please just write to us. My email ID is very simple, anilchopra@bajajcapital.com, and we'll be very happy to send you one copy of this. Now, friends, coming to the old tax regime and the new tax regime, the difference. First of all, today...
Just give me a second, Mr. Chopra. Mr. Malhotra, can you please stop the screen share?
Sure.
Yeah, I also requested.
Please. Mr. Chopra, you carry on. I'm sure he's
Okay.
stopping the screen share. Yes, thank you.
No problem, no problem. So, friends, I was telling you that the tax laws have been simplified significantly, and now most of us know that we have two options to choose from. What one is referred as the old tax system, and the new one which was introduced 2 years ago, has also been now, as one of the options. One has to choose between the old and the new. And this is one question which has been asked to us by thousands of people in the last few months as to how to choose which is more beneficial. And the answer is very, very simple. First of all, today we are sitting on 21st of July, and I'm sure most of you know that 31st July is a very critical date when we have to file our income tax return. Before that, I'm sure many of you would have already filed your ITR for this year, but some of you may be planning to file in next 10 days or so. So as far as the ITR for the previous year is concerned, which has already ended on 31st March, for 98% people. Okay, so email ID, my email ID, I'll just quickly type it so that you can, if some of you want to note it,
So
you can.
Chopra ji, we can answer the questions later on.
Yeah, this was not a question. This was just a request to share the email ID, which I am just typing.
And Mr. Malhotra, your screen is still being shared. If you can stop sharing, please.
My screen.
Yes.
Oh,
Okay, so I was telling you the new tax regime and the old tax regime. As far as the previous financial year is concerned, which has already ended on 31st March, for which some of us may still have to file our income tax return, for 98% taxpayers, the old tax system will be more beneficial, okay, for 98%. Now, some of you may be thinking that who are these 2% people for whom, even for the previous financial year also, the new tax system would be beneficial? And the answer is these 2% people are such taxpayers who have just started their career, who are just out of the colleges, they are freshers, they have got some campus placements, they don't have any previous tax backlogs like a PPF or an insurance policy or mutual funds, etc. They are beginning their career now. They can straight away go to the new tax regime. But I'm sure most of us, those who are attending this program, we are all experienced entrepreneurs, and we have been running our businesses or professions for last few years. So that will not be the case. So the answer is, for this financial year, which has already ended, for which you have to file your return, the old tax system will be beneficial. Now coming to the current financial year, which has already begun. Now we are in July month, and this year will close on 31st March 2024, for which we will be expected to file our income tax return in the next year before 31st July. For this financial year, please note my answer, for 95% people, yes, for 95% of the taxpayers, including all of you, shifting to the new tax regime will be more beneficial, right? So that is the very interesting part. Now, some of you may again be wondering that who are these 5% people for whom, even in the current financial year also, the old tax system will be beneficial? And the answer lies in a very magical number, and that number is 3,75,000. Okay, so just keep that in mind. I'll come back to this number of 3,75,000. What is its significance? Maybe 10 minutes from now. But before that, let me get, with the permission of Vani ma'am, to get into the important aspects of tax laws, which would make the topic very, very simple. Okay, can I go on with Vani ji?
Yes, Chopra ji, please do.
Okay, right. So friends, as far as tax laws are concerned, there are 3 English words, right, which I'm going to share with you, and all of you have heard them. They are very similar sounding, but their actual meanings in income tax is very, very different. They play a very important role. And these 3 words are deductions, exemptions, and rebate. I'm sure all of you have heard these 3 words, right? In income tax context, these 3 words play a very important role. Deductions, exemptions, and rebate. All these 3 words, they are similar sounding, that as if they are giving us some benefits. Deductions mean we are getting deduction, that means our tax liability is going down. Exemptions also mean to exempt, so no tax to be paid. Rebate, okay, again we are getting some discount. So all the 3 words, they are very beneficial sounding, but their meaning is very, very, very different. Okay, so if we understand the difference between deduction, exemption, and rebate, then half of the tax laws are clear to us. Then we can deliver such lectures, what I'm doing today. So I'll quickly share with you the exact difference between exemption, deduction, and rebate, and then you can yourself do your planning. So first is exemption. So friends, as the word is denoting, exemptions are such incomes which are exempt from income tax. which means no income tax is payable on them. And if no income tax is payable, then no planning is required. It's so simple it is, either fully or partially, right? So exemptions are such incomes which are either completely exempt or partially exempt. And if I were to ask, the august audience here, right, just to make it interactive, if some of you can put it in the chat, I'm sure you would know which are the most popular examples of exempt incomes. Incomes on which no tax is payable. Completely exempt. Government jobs, no, Anushka madam, sorry, no, government jobs are fully taxable. Gifts, Nikki Singh madam, even gifts are also not completely exempt. Okay, they are partially exempt, but it's a good try. Okay, but I'll give you, the most popular answer. The most popular answers is agriculture income, right? I'm sure you know that agriculture income, whether it is 1,000 rupees or 1 lakh rupees or 1 crore or 50 crore or 100 crore or 1,000 crores. No tax on that. That is India, right? And that is now you know that how there are so many rich farmers, but they don't pay any tax because agriculture income is exempt. Okay, that is something which is not very important to us because we are not from agriculture background. We are professionals. So what are the other common examples of exemption? The next best common example is interest on PPF. I'm sure all of you, each one of you have public provident fund account. And if not, I strongly recommend you to open one today, tomorrow, within 1 week. Okay. So whatever is the interest on public provident fund, whether it is 30,000, 3 lakh, 11 lakh, 15 lakhs, no tax on that. What a lovely thing, right? So interest on PPF. Similarly, many of you may be drawing salary, from some companies. If you are in your own company or whatever, corporate or whatever organization, then you have your EPF. So interest on EPF also on the provident fund is exempt in 90% cases, not in 100% cases. What are the exceptions are? If your own contribution is more than 2.5 lakh rupees in 1 year, then whatever amount is in excess of 2.5 lakhs, interest earned on that is taxable. But otherwise, in most cases, interest on EPF also is fully exempt. Then the other very important example of exempt income is we are discussing exemptions income which are completely exempt, for which no planning is required, is amounts received from life insurance companies. Now, when do we receive amount from a life insurance company? Only on 2 occasions. One is an unfortunate occasion in case of death, and second is on maturity. So if a person who has taken a life insurance policy, unfortunately, if he dies, then the nominee gets a big amount, it could be 10 lakh, 50 lakh, 1 crore, 5 crore, whatever is the insurance policy amount, no tax on that. Okay, that is another example of exemption. And then the second is, other than death is, of course, death occurs very rarely, mostly we survive. Then in that case, on maturity, when we get the money back from insurance companies, that also in 90% cases, there is no tax on that. That is also exempt. The only exception is that the premium which you pay on your life insurance policies should be less than 10% of the policy coverage amount. So example is, supposing you are paying premium of 1 lakh rupees every year and the policy is for 20 lakh rupees, that means the premium which you are paying is less than 10%. So whatever amount you receive on maturity, that is also exempt. So these are few examples of exempt incomes. Now let's move to rebate. Rebate is also another very important word. You must have heard income tax mein rebate mil gayi, income tax ki rebate hai. But rebate, let me tell you, is only one section, and that will not apply to most of us because most of us are entrepreneurs. We are doing very, very well. Rebate in our country is given only to such people whose income is below 5 lakhs for previous year and below 7 lakhs for current financial year. And I can quickly skip it because I can make a safe guess that all of us are much above, those 5 lakhs and 7 lakhs level. So rebate does not concern to any one of us, those who are attending this. So we'll forget rebate also because rebate is only one section and only to those whose income is below 5 last year, below 7 this year. Now we'll come to the most important third word, which is deductions. Yes, deductions, friends, is what 80% of income tax understanding is. So deductions, which are the common section, I'm sure most of us know, the most common deduction is always from income. Because we get a deduction from income, income goes down, so tax also goes down. When tax goes down, every money of tax saved is income earned. They say a penny saved is penny earned. So similarly, whatever amount of tax we are able to save, that much our income goes up. So Most popular section in deduction is section 80C, which all of us know, 1.5 lakh. That's the only limit, only 1,50,000. And this has not been changed. It's been so many years, but government is not changing because they have their own compulsion. Now, what are the schemes which qualify for section 80C, these 1.5 lakhs? There is a long list, but the common ones are, first is if you do a bank deposit of 5 years or more. Second is contribution to provident funds, whether PPF or EPF, wherever. The moment you complete 1.5 lakhs, section 80C is over. Then there are tax saving funds, which are known as ELSS, the equity linked saving schemes, which are issued by mutual funds. Very, very good for wealth creation. That also gives you section 80C benefit. Sukanya Samriddhi also, yes, Nikki Singh, madam, absolutely correct. Sukanya Samriddhi, PPF, EPF, then NSC. I'm sure you must have heard National Saving Certificate, those pink things that you get from post office. In Hindi, they're called Rashtriya Bachat Patra, but they are not popular anymore. We don't recommend them. But that also gives you deduction under section 80C for 1.5 lakhs. Then what are the other things? Then it is tuition fee. Tuition fee, we all have to pay tuition fee of our children. I don't know why government has put this. Even tuition fee also in 1.5 lakh. But then some people like to claim that also. So that also is there. And then finally, in section 80C, we have all the insurance premiums, on life insurance policy. So whether it is a term plan, whether it is a whole life plan or a ULIP, so many varieties of life insurance plans are there. Whatever premiums are paid, they also get covered in section 80C within this 1.5 lakh only. The only condition is what I discussed earlier, premium amount should be less than 10% of the insurance policy amount. So these are some of the examples, but the number one question which is often asked to us as a tax planning expert is, what is the best way to use this 1.5 lakhs? Out of so many options, which is the best or which are the best? So our answer is, or my answer as a financial planning expert is that you must divide this 1.5 lakh into three buckets of 50,000, 50,000, 50,000. First 50,000 should be used for provident funds, which takes care of your retirement planning long term. Okay, so 50,000 goes into provident fund. Then second 50,000 should be used by ELSS plans, or what we call the tax saving funds, which goes into equity, which creates wealth, which is helpful for meeting medium-term plans like children education, children marriage, buying a house, buying a car, etc. And the third 50,000, the third bucket, should be used for life insurance policies, which are very important for protection of your family members, whole life plan, term plan. So this is how we recommend this 1.5 lakh section 80C to be divided into three: 50,000 provident funds, 50,000 tax saving funds, and 50,000 insurance policy. Now, which are the other important section? 80D is another one where I'm sure all of you, whether women or men, must have a proper health insurance policy to ensure that if anybody falls sick, then the bill is paid by insurance company. So for that also there is a deduction, section 80D, but that amount is only 25,000, right? 25,000 for everybody, what we call junior citizens. Who is a junior citizen? Below 60 years, okay, below 60. I'm sure all of us are much below that, okay. So 25,000 is the deduction, but this deduction can be increased from 25,000 to 75,000 if we just do one small thing, which we all must do. That is, if we include our parents also into our health insurance policy. If we take a family floater plan, and if we include parents also with us, there is a more propensity or a chances or probability of the older people falling sick earlier, right? Those who are above 60. So if we include parents also in our health insurance policy, then the premium up to 75,000 rupees can be claimed as a deduction. So for example, if there is a policy where the parents are also included, the premium is 1 lakh rupees, 75,000 rupees will get deduction. If the premium is 68,000, then we will get only 68,000 as deduction, because 75,000 is the upper limit. Okay, so that is health insurance. Then the third deduction, very, very popular, is NPS. NPS is another thing which we strongly recommend, particularly to ladies, those who are not in proper jobs, those who are running their own business, those who are running their own profession, those who have entrepreneurs. They don't get any pension, they don't have any employer, they don't have any boss, they are their own boss, right? Many of you must be your own boss. So then you should go for NPS, National Pension Scheme. And there, that is open to every member of public. Anybody and everybody can go for NPS. 50,000 rupees is the deduction which government has allowed under section 80C CD1B. So you may contribute 1 lakh, 2 lakh, 5 lakh as per your affordability, but up to 50,000 rupees, you will get deduction under section 80 CCT 1B. So that is the another one which we strongly recommend. Then there are, some of us are, charitable by nature, or we want to do philanthropy. So we like to give donations to, maybe a leprosy mission of India or blind school or someplace. So if we give such donations to approved institutions, then whatever amount of donations we give, 50% of that can be claimed as a deduction. So for example, if we give 1 lakh rupees to blind school, then 50,000 rupees we can claim as a deduction in our return, right? And if we give this donation, to a political party or to, some like Red Cross, etc., or the Prime Minister National Relief Fund, then the 100% amount is, allowed as a deduction. But there is one condition: whatever donation we are giving, that should not be more than 10% of our total income, which is in case of donations to other than political parties. But political parties, government has allowed, we can give even our entire income also to political parties, that is allowed. But cash is not allowed. 100% payment has to be by check or by bank transfer, online, etc. Then, friends, the other important deductions, they are, interest earned on savings bank account. That's a small amount, only 10,000 rupees, but you shouldn't forget to claim that. Every quarter you get some amount as credit, you get a message from your bank, so much amount credited, as in your savings bank account. So total it up, that is taxable, but 10,000 rupees you get a deduction if you are junior citizen. If somebody is more than 60, then that deduction goes up to 50,000 rupees. Okay. And then finally, now the most important deduction, the biggest one, that is interest on home loans. I'm sure some of us may have taken home loans, from a bank or so, to have a home of our dreams that could be costing 2 crore, 3 crore, 5 crore. We are paying EMIs. So whatever monthly installments we pay in the whole year, let us say we have a home loan where we are paying, say, 50,000 rupees a month. So in the year we have paid 6 lakh rupees. The bank at the year end will give us the breakup that out of 6 lakh, how much is principal and how much is interest. So let's say 4 lakh is principal, 2 lakh is interest. Then this interest 2 lakh rupees also can be claimed as a deduction, which is a big deduction, 2 lakh rupees, right? Which gives you, if you are in 30% tax bracket, you save 60,000 rupees. So these are some of the common, of course, the list is very long, but of course, because the time is limited, so we won't be able to get into all the nitty-gritty of other ones. These are the major ones. Okay, these are the deduction. Now I'll come to the question which I left unanswered. Okay, Namita ji, we'll give you. Can it be claimed by joint owners? Okay. So home loan is the question. So Vaniji, do I have your permission to keep the questions for the end? Because I just want to finish the topic, then take the questions.
Yes.
Sure, sir, sure.
Okay, so now I am going to answer the most important question, which is how to choose old or new. And I told you for 95% people in the current financial year, which is already running now, you should be choosing the new tax system. But the question in your mind is, who are these 5% people for whom even in the current financial year, the old tax system will be better? And I gave you a number, if you remember that number, 3,75,000. What is the significance of that magical number? That I'm going to tell you now. So you total of all the deductions that we discussed. You remember 1.5 lakhs 80C plus 50,000 NPS plus 25,000 health insurance plus donation, this, that, right? If that total is more than 3.75 lakhs, okay, then only you should go to the old tax. You should continue with the old tax system, even in the current financial year also. But my guess and my bet is that for 90% people, and you can also confirm, the total would be less than 3.75 lakhs. And then shifting to the new tax system would be much more beneficial. How it is possible? For whom it will be more than 3.75 lakhs? Where there is home loan, right? Everybody doesn't have a home loan. Some of you may be having, but if you're having a home loan and you are paying interest itself may be 2 lakh rupees plus 1.5 lakh rupees of Section 80C plus that health insurance plus this, that. So the amount will go more than 3.75 lakhs. And if the deduction that you want to claim is higher than 3.75 lakhs, then you should continue with the old tax system because you have the choice. So with this, now I'll come to the Q&A. So first question is, Somebody is asking-
Chopra ji, if you could
Yes.
quickly cover the presumptive taxation
Okay, presumptive tax.
or the
Okay,
capital
sure.
gain tax, because I
Right.
think people would be interested.
Okay. No, I have time. So if the time limit is crossed, I can.
Nandini, can we continue for 5 more minutes, or should we start taking Q&A?
Yes, sure, go ahead. But after that, we can take the questions, no problem.
Okay, so presumptive tax is a very good way, simplifying the tax procedures, and this is available to professionals. Professionals like what? Like interior decorators, like doctors, like advocates, like consultants. So some of you may be running your own practice as a doctor or as a advocate, etc. In that case, if your annual gross receipts are less than 50 lakh rupees, okay, and this amount is being enhanced to 75 lakh rupees from the current financial year, which has already begun. So if it is less than 75 lakh rupees expected to be in 23-24, then you can take the advantage of this presumptive tax. What is the presumptive tax? If you opt for this, then straight away you get 50% of your income as deduction. Okay, no other deduction is allowed. If you are paying rent for your office, if you are keeping staff, that is not allowed, because straight away 50% deduction is allowed. So if your income, say, is 60 lakh rupees, say you are a doctor, you are practicing, you have a clinic, and your annual income is 5 lakh per month or 60 lakh rupees in a year, then you can say that 60 lakh is my total income. So straight away it will be reduced to 30 lakhs. And then 30 lakh only you have to pay tax, and you can still claim, that section 80C, section 80D, whatever we discussed just now, all that can be claimed, but no other clinic running expenses will be allowed to you, because that in one shot has been given to you as 50%. And that is also true for any other professional, whether chartered accountant, whether interior decorator, interior designer, all the various type of professionals, media professionals, if the total income is below 75 lakhs. And it should not include cash. There may be some doctors, cash mein de jate hain patients hamare. If that is the case, then the limit is only 50 lakh rupees. But if most of the payment which you are receiving are by either online transfer or by check or straightway into your bank account, then the limit has been enhanced to 75 lakh rupees. This is for professionals. But for businessmen or businesswomen, because this is a women's program, so for businesswomen, those who are doing some kind of business where they are doing purchase and sales, and if the total turnover that they are doing is less than 2 crore rupees, then they can also take advantage of this, and they have to pay tax only on 8% of that, which is 16 lakh rupees. So they may be doing turnover of 2 crores, but they need not maintain any accounts, no audit is required, no formality required, simply calculate 8%, that becomes your income, and you pay tax on that. So this is the presumptive tax, which we would strongly recommend that all of you should take advantage of it, those who are either professionals or small businesses. It is not available to salaried people. Okay. Then finally, the topic was capital gain. Capital gain occurs when we sell an asset. That asset could be a house, that asset could be a shop, that asset could be gold, that asset could be mutual funds, anything like that. So if we sell this, the capital gain is of two types, short term and long term, right? So short term and long term, for different assets it is different. So I can quickly tell you, for property, which is either residential or commercial, immovable property, right? Land and building, the period is 2 years. If we buy a property and sell it before 2 years, then whatever profit we make, it is short-term capital gain, and we have to pay full tax on that. Example is, we buy, supposing, a plot in DLF for 3 crores, and after 1 year we sell it for 4 crores. So we made a profit of 1 crore. On that 1 crore, we have to include it in our income and pay full tax on that. No saving is possible. But if we sell after 2 years, any flat or plot or villa or bungalow, or any kind of property, then we get long-term capital gain. There you can save tax by investing in capital gain bonds up to 50 lakh rupees. Also, you get indexation benefit, which is the inflation adjustment, etc. Right? So that is for land and building. And for equity, some of you may be dabbling in shares or equity mutual funds. The period is 1 year. If we buy equity or equity mutual funds and sell it before 1 year, then whatever profit we earn, it is short-term capital gain, and it is only 15%. Your actual rate may be 30%, but on this profit, you pay only 15%. But if you sell after 1 year, or after 5 years, or after 20 years, then the tax rate is only 10%, that too only on profit, right? And there also first 1 lakh rupees is exempt. So I'll give you an example. Supposing you invest in shares today, say 5 lakh rupees. After 3 years, you sell it for say 5,50,000 rupees. So you made a profit of 50,000. Because this is less than 1 lakh, no tax on that. But supposing you sell it for 10 lakh rupees, then you made a profit of 5 lakhs. First 1 lakh, no tax. Balance 4 lakh, only 10% tax, which is only 40,000 rupees. So this is how you calculate the capital gain on equity and equity mutual funds. And finally, debt and debt mutual funds, there the period is 3 years. So first one was property was 2 years, shares is 1 year, and bonds, debentures, and debt funds, it is 3 years. So before 3 years, if you sell, there is complete, you have to include it in your income. And now for debt funds, even long term also has been removed after 1st April. So for whatever period you may hold it, there is no long-term capital gain on debt mutual fund, and one has to pay full tax on that. So in this short period, I could only cover that, Maniji. I'm feeling little constrained. Of course, these are large topics, such thick books are there to explain all this, but I've tried to cover it.
The idea was to give an overview to
Yes.
all our members of the topics. And, I think it was a great takeaway from both.
Right.
Before we start taking the questions, I would like to say that we would distribute the books that Chopra ji was mentioning on tax saving guide to all our members. It will be a complimentary issue.
Yeah, we'll send you 100 copies and then you can further distribute it.
So coming to the questions.
I see one question there already, which has been asked by somebody. Can it be claimed by joint owners? And I think that question was asked when I was discussing home loan interest.
Yes.
Right. And this is a very commonly asked question. Almost every day we are asked this question, and the answer is yes. But some conditions have to be fulfilled. So supposing husband and wife, they both are, say, working, and they both buy a property, and they both take a loan. Right? Now, what are the conditions? First, the property should also be co-owned. If the property is only in husband's name, then wife cannot get the benefit. If the property is only wife's name, husband cannot get the interest benefit, in tax. If the property is jointly owned 50-50, and if the loan is also taken from bank 50-50, which means half the installment husband is paying, half the installment wife is paying, in that case, both husband and wife can claim 2 lakh each. Separately, it becomes 4 lakhs. But answer is yes, provided we fulfill these conditions.
All right.
Thank you, Nani Singh ji, for giving compliment, but I look forward to more questions if there are any.
There don't seem to be any unanswered questions. I had one question on life insurance, tax deduction on life insurance. I think there was some policy change. Has that been implemented?
Yes,
Or
31st March. No. Very important policy change has been made. But if you want me to explain this, I'll have to take 2-3 minutes to explain it completely. So one is that these plans where that important change was made on 31st March, they are known as deferred tax-free annuity plans. Now it may sound a little technical, but very simple it is. It means that we pay some premiums now for every year when we are earning. And after 8-10 years, then we start getting pension, monthly income. So deferred tax-free annuity plans, they are known, right? There, if the premium is more than 5 lakh rupees in a year, right? Of course, that means rich people can afford that. And all of us, of course, surely can afford it. But that benefit has been withdrawn. So if the premium is more than 5 lakh rupees every year, then future pension that the person will get, that will be taxable. But we can still take the advantage of tax-free if the annual premium is less than 5 lakh. For example, 4.5 lakh, 3 lakh, 2 lakh. So just to ensure that rich people do not take big advantage of that facility, that rule was changed. So more than 5 lakh premium, the future pension have been made taxable. That is the big change which happened on 1st April 23.
Thank you so much. Now over to Megha, Vice Chair, to make her closing comments.
Yes, thank you so much. Thank you, Mr. Chopra, Mr. Malhotra, for such an immersive and such a for such an immersive and critical session. I mean, little did I anticipate that such a dry topic would become so engrossing. I mean, I made copious notes, if you can see. I have been writing and taking screenshots. So thank you for that. Thank you, Nandini, for initiating the financial series. Thank you, my dear friend Vani, Kanika, Geeta, and the thought leadership team for curating such fabulous learning events. And thank you to the audience for asking questions. And I know there weren't too many questions because the speakers really, truly demystified such an intimidating topic so beautifully that there was nothing that was not answered. So thank you so much for that. And if I may take a minute to just announce housekeeping, we will have on the 4th of August a session on retirement planning. So till then, stay safe and stay informed. Thank you, everybody.
Thank you.
Thank you so much.
Okay,
Have a
thank
good
you
day.
for having us. And
Of course.
Vaniji, you must have told them that retirement planning is my domain. I'm going to do 1 hour webinar in 10 minutes now, 1.5 hours. That's my domain.
So, okay. We're looking
I
forward
accept
to
it
that.
from you, sir. Yeah, Chopra.
Thank you.
So it was a
Thank you so
refresher
much.
for everybody, including me.
Okay.
Good one, sir. Thank you so much.
All good.
Thank
Thank you,
you.
Vaniji. Thank you, Nandini ma'am. Thank you.
Pleasure.